This is Back Roads of Illinois, server to farmers and ranchers in central Illinois Midwest. Today's edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on a Thursday afternoon for today. I am Cesar Delgado. I am your host of today's program. I am going to have a conversation about the cash grains markets for right now in the Northern Plains and Colorado with Bryan Irey from Crossroads Cooperative. And we were talking about the commodities with John Heinberg from TotalFarmMarketing.com. Otherwise, we were talking with Bryan Irey from Crossroads Coop. I am going to have a conversation about the cash grains markets for right now in the Northern Plains and Colorado with Bryan Irey from Crossroads Cooperative. Bryan, how are you?
I am doing very well today. How about yourself?
Very good.
That's
Bryan,
good to hear.
how is the planting progress in Colorado and Northern Plains into Nebraska?
Nebraska is getting pretty well wound up, according to the USDA. I think they're all but finished up there as the weather's been fairly conducive to planting in Nebraska. Colorado, the USDA had us at about two-thirds planted. I think they're just a little bit behind. I think we're a little closer to probably 80 to 85% planted at this juncture, and what remains is mostly dry land.
What is the weather forecast?
The forecast is for some rain here over the next 4 or 5 days. Our weather pattern turns wetter, and that is something we desperately need. It has been very dry out here, really since early fall of last year. We've had a few opportunities for moisture over the last 30 days that haven't really materialized the way that we would have liked to have seen. But this last half May and first 10 days of June out here are generally pretty wet, and hopefully this situation develops over the next 4 or 5 days and we get some good general soaking moisture, because it is badly needed on the wheat crop, and it would sure give the corn crop a boost as it comes out of the ground as well.
How is the fundamentals on the cash grains markets for right now?
Here in Colorado, in western Nebraska, demand is a huge problem. We're primarily driven by livestock feeders out here, and cattle numbers are very, very low at the moment as feedlots just continue to struggle to buy cattle. On the ethanol side, the plants out here are staying fairly current. They've been able to buy grain, I think, at reasonable values due to the fact that they're not facing a lot of stiff competition from either the export market out of this part of the world or out of the livestock feeders.
How is the cash grains markets for right now in Colorado compare in the Midwest, like in Illinois, Iowa?
So our base is here in the Greeley, Colorado market, which is one of the primary cattle feeding markets in Colorado. There's also an ethanol plant here. We're at about 50 over delivered to Greeley currently. And that's putting us, just a little over $5 a bushel. We're generally somewhat of a premium to the Midwest markets, just because most of the grain is grown in the eastern part of the state and has to be hauled here to the Front Range.
Hmm. What is your thoughts on the balance sheet from last week?
I think the balance sheet is, and I've made this comment before. I do a few shows like this out here, and I made the comment a week ago. I really think the USDA miscalculated um, yield for 24-25 in the January report when they dropped it 3.9 bushels per acre. It just feels like there is more corn around than that, at least in our market. And from some of the Midwest traders, I hear the same thing, even though the farmer is not selling much corn in either the Corn Belt or this part of the world at the moment with the sell-off that we've seen in futures. It does feel like we could pretty easily add a couple 100 million bushels back into the balance sheet at some point. That may sound a little bit radical, but boy, the market would, it just feels like from what we're picking up out of the country, that could be the case. And I do think that at some point, you're going to see the USDA have to adjust exports up another 50 million. But I also think that you're going to have to take somewhere between a minimum of 50 million and a maximum of 50 or 100 million out of the feed consumption as well.
What are you looking for next couple weeks, Bryan?
I think what is key at this point is this little rally that we've seen in corn over the past 4 days. I think it's going to be interesting to see if that can continue. I think it's mostly being driven by managed money that I think was a little bit surprised to see that they were short nearly a half a billion bushels of corn when the commitment of traders report was released last Friday. I think they're taking a little bit of an aggressive approach this week, trying to reduce that short a little bit, as typically they're not short a half a billion bushels of corn going into the early part of the growing season. And obviously there's some planting issues in some of the wetter areas in the Delta, as well as it seems like the extreme eastern corn belt has had some areas that are too wet, and a lot of chatter about prevent plant here. I'm not hugely surprised to see a bit of a rally here, but I think it's going to be very important that we sustain that rally today and tomorrow, and don't get a big sell off from the folks that bought it earlier this week and just want to go home risk free over the weekend.
What is your position on the feeder side?
On the feeder side, I think it's an interesting situation. The feeders out here have been able to pretty much name their price for fed cattle. I think there's good profitability at that level. They seem to be in the driver's seat for the first time in a while, and good to see them printing some black ink at this point. And it seems like the packer is the one that's having the red ink problem for the moment. But it is really good to know that these guys are putting some profits on the bottom line again.
Finally, what is your position on this planting progress for right now?
It's been very interesting to see the crop go in the ground in a very, very quick fashion. I do, however, think that when next Tuesday rolls around after the Memorial Day holiday, we're probably going to be somewhere around 90% planted based on what we're hearing out of the country. That last 10% could certainly get planted very slowly, if at all. A little more chatter around this week about prevent plant in some of those wetter areas. I don't think that it kills the corn balance sheet if we do plant fewer acres. It is probably better off for producer prices should that happen at this point.
Where people can find you for your consulting services for their cash grains for the Great Plains.
So yeah, we can be reached here in Colorado at our office at 970-673-9888. You also have a lot of information up on our website, www.crossroadscoop.com. And we're more than happy to help out producers, end users, whoever may need us to help them mitigate their risk.
Thanks, Bryan.
Thank you for having me.
This is Bryan Irey from Crossroads Group on Back Roads of Illinois. Well, I'm talking about the commodities markets with John Heinberg from TotalFarmMarketing.com. John, how are you?
Doing well, doing well. Looking forward to a nice 3-day weekend here. It's going to be some decent weather after this rain has left the system. So looking forward to it.
Me too. How is the planting progress in the field in Wisconsin?
Well, planting's been moving along very, very nicely. We got ourselves a little bit over 70% done, but it was a big jump last week with that beautiful weather here before the rains came in. We put about 29% of the corn crop in a matter of days. Again, just showing you how fast we can get this crop planted and when the weather's right, given the technology, soybeans also around a little bit around that 70% window. Again, both of them trending ahead of expectations in the 5-year averages and things along those lines. Now we're going to get out of the fields for a while here. We got a lot of rain come across most parts of Wisconsin here with this round of storms. I know we pushed over 2 inches here in my area. Just talked to somebody else from the western side of the state, solid inch plus. They'll be out of the fields for a couple days. But things are starting to dry out, but staying cool here. But we should be able to get things wrapped up, especially if the weather forecasts stay drier, like we're starting to see as we get the rest of this corn crop in here into good old Badger State.
What is the weather forecast for next few weeks ahead with the final round, John?
Well, that's something we're going to have to take a watch here now. I know we've got this rain through. We got some pretty good coverage. Some areas could have got a little bit more that really kind of needed it. Talking to a producer today, they were supposed to get maybe pushing over 2 inches. They got just over an inch and, things that drained off pretty quickly for him. So he was kind of hoping for a little more, but now we're starting to see a little bit of a drier trend moving in, especially in the western corn belt and the northern tier of the corn belt. Temperatures are going to stay cool here, but when we start getting into that second half of those extended forecasts, that 10, 12, 14-day window, we're supposed to see things start warming up. So that's going to be something we really kind of need to watch here. Number one, we got about 20% of this crop left to plant for both corn and soybeans. Our market might shift its mindset from, boy, we're planting really fast. Are we going to get those other few percentage points in here? And obviously, too, if we have any issues there, that takes those trendline yield targets off the table a little bit as well. Maybe that's some of the reason we saw some decent strength in the gray markets here over the past couple of days is just the fact that, we're getting past that key chunk of the crop, and now we got to get those final acres in. Eastern Corn Belt, Southern Corn Belt, obviously still very, very wet. We got some producers in those regions that had a very difficult time getting in. Some have been heavy rains, but some have been just that half inch every couple days. And as soon as the soil gets a little bit ready to go, another shower comes through and covers them up again. So there's some concern out there that we could have some acres that won't get put in the ground. That'll grow more as we get into the 1st of June, but again, too, we're still looking at some long range models that keep the Western Corn Belt, especially in a warmer, drier pattern. And that's where a lot of those extra corn acres are. And we're really going to be counting on that production. So again, just another reason I think we're going to have a lot of volatility this year in terms of weather in the marketplace is that some of these forecasts can be a bit concerning if they get some prolonged periods of dryness and we see some ratings starting to slip when we get those crop ratings starting the 3rd of June.
Yeah, it's pretty wet in southern Illinois.
Yeah, that's going to be one of those key areas we need to watch. Basically, that southern Illinois, up the Ohio River Valley into Ohio. There's going to be some laggard planting there. Again, you saw that in the last progress report. Illinois, Ohio, Kentucky, Tennessee. They were the groups that were the most far behind in terms of planting pace, while the rest of the states were ahead of schedule. So that's going to be something we need to watch going forward. And not a lot of work got done this week. I mean, there were some pockets and people could have got in, but I don't know how much of a move we'll see in that planting progress for both corn and soybeans on next week's report. They'll come out more on Tuesday with the Memorial Day holiday.
John, could you give us an update on the trade deficit for right now with the grains?
Let's just focus on grains in general. And trade cash sales, and then we got some paper to take over. But our big focus is going to be really building the base as we move forward here if prices continue to climb.
It is pretty stuck on the corn markets. However, what is your thoughts on the beans markets?
Soybean markets actually performed very, very well here over the last handful of days. And some of that's been tied to the soybean oil market and what's going on there. We just got a headline last night. President Trump and his team are looking at cleaning up some of the backlog of SREs, that's those small refiner exemptions. And that put major pressure on soybean oil on the overnight session. Again, with those exemptions, that means those smaller refiners can bypass blending biodiesel into the mix, therefore it puts a little less demand on the table. And we saw the soybean oil market react to that, and that's why beans are down 7, 8, 9 cents on the overnight session here on Wednesday into Thursday. So I thought today decent export sales on old crop. Got some good buying, got some follow through, got that November contract back over 1050, got July back over 1060. So that was some pretty good closes there in terms of a market that could have fallen apart on some pretty negative news. So it just tells you maybe there's some money that wants to own this market right now. I'm a little bit friendly beans here just because of the seasonal window. If we don't get those last few acres in, now we're going to be really tight on acres. Trendline yield's not there. Next thing you know, carryover can get pretty small pretty quickly in the soybean market. So I'm a little bit optimistic. Same philosophy, been owning some calls over top, looking for an opportunity for producers to make some sales that may work and let the paper take over. Biggest thing I'm going to be focusing on because of that large global supply is going to be making sure we have some type of a put floor going into the fall in case this market wants to roll back over and retest those sub $10 lows.
I'm just curious about the fundamentals with the beef markets. What is your thoughts on it?
The cattle market continues to be lifted here by strong cash trade as well as strong retail demand. Choice carcasses 360 today, so that's obviously supportive. 230 cash in the north, maybe up to mostly dress trade around 360, a few outliers up there around the 370 area, which is a massive number on the historical level. So those are the things that have been supporting this cattle market. But we got a market here that put a pretty ugly reversal in last week. We fell apart pretty quickly for a couple days. Now we've been consolidating, but trickling higher. So we'll have to kind of see how things play out. Now we got some really important numbers coming tomorrow. Next cattle on feed report. Maybe we've priced that in here. We're already looking at total cattle on feed being about 98%, 98.5% of last year. Placements about 97% of last year, just a touch under. So that just reflects a very tight cattle supply going forward, which still should be supportive of the market. The big report tomorrow, though, could be the cold storage report. Since that Chinese exemption got put into place, the tariff exemption got put into place, we've been a strong importer of Brazilian beef, almost at record levels here on a week-by-week basis. Bringing that Brazilian beef in, a lot of that goes into the ground trim, but again, it's just going to be a buildup of supplies. Throw in those big carcass weights that we're putting out there. That cold storage support report could show us a bit of a jump in beef supplies, and that could be concerning to the price and to the market in general. So that's something I'm going to be watching probably as much as the cattle on feed report. will be those cold storage numbers. So right now, at least fundamentals are friendly, but maybe the technicals and some of the momentum things are kind of slowing down here. And now that we're through the Memorial Day window, that could be a point where we could see some pullback just because we can during that season.
Do you have any concerns about the R word on the economy in general, John?
I mean, there's always concerns. We're seeing such a policy shift over what we've been through the last handful of years that the markets are very shaky. We saw that yesterday with just concerns about increased debt for the U.S. debt and where we are in terms of borrowing power. We started the week off with a downgrade in terms of our credit rating. So there's some things out there. Now it's going to take time to work through some of these new policies and see where they go into place at and how that all plays out. That's still one piece in the cattle market that's a big concern to me is continued the consumer demand. We're seeing credit card delinquencies at a record level right now. That's just showing me the consumer's getting a little tighter in funds. Is that something that all of a sudden that demand for beef starts slowing down and they move to the cheaper pork and chicken? So we'll have to watch. So I think that's the thing in the cattle market that's going to be a focus. It's going to be that consumer and that U.S. economy, because if we struggle, that high priced beef will be one of the first things on the chopping blocks in terms of the menus at home.
We will see about that, John. Do you have any final thoughts on the corn estimate on June report?
I had some initial thoughts here, but we'll have to see how the next couple of weeks go in terms of planting pace and weather. My lean was to, with the good planting pace early, that we get a few more corn acres, a few less bean acres. Some of the reason that maybe that bean market's getting a little bit more supported here. But again, got to kind of watch how this next couple of weeks plays out with that 20% that still needs to be taken care of. So that'll be something we have to see there, at least when we get that acres numbers at the end of the month. Now, next WASI report here, first part of June. I think obviously with today's export sales on corn, maybe even those sales on soybeans, do we get further reduction of those old crop carryout supplies? Right now corn, we're just sitting a less than 200 million bushels away from the USDA target for the marketing year, and we still got till August 30th in the marketing year to get there. So it won't take much, and next thing you know, we're going to be past in terms of sales at least ahead of what the USDA is expecting. Then it comes down to getting those corn bushels shipped. So that's going to be something we'll watch. Do we see those carryout numbers on old crop tighten up? That of course spills into the new crop balance sheet, which the USDA did leave some wiggle room that they can make some adjustments and still keep those carryover levels that they forecasted fairly steady. But at the same time, if things don't go well with the crop for both corn and soybeans, those supplies could tighten up pretty quickly next fall into 2026. So again, that's one of the reasons why I think we could have a lot of weather volatility this year as we get further into the summer and growing this crop out.
Thanks, John. This is John Heinberg from TotalFarmMarketing.com.
Thank you, Caesar. Have a great day.
Thanks to Bryan Irey from Crossroads Coop and John Heinberg from TotalFarmMarketing.com. This has been Back Roads of Illinois. I am Cesar Delgado. You have a good day.